Welcome to the Cashflow Academy podcast. I'm your host, Andy Tanner. Wonderful to have you with us. This is where we make investing fun, simple, real. And I am joined by my good friends, Cory, Halliday, Noah Davidson. Great topic on deck today. We're going to talk about recession-proofing your assets, right? And there's a lot to that. So it'll be a great discussion. Drop by yourinvestingclass.com. I'm serious. If you haven't done that yet, go do it now. We have free resources there. And we'll talk about recession-proofing in the terms of you want to get things done beforehand. It's easier to prepare for a car accident way before than trying to put your seatbelt on in the middle of it. So go to yourinvestingclass.com. It's really, actually, we have a free ebook right there at that site, not a class. So get that, because what it does is shows you how to begin. And if you've read books or seen podcasts and wealth, but you don't see your needle moving, you don't see more, like, here's a good test. Did you receive more passive income last month than you did, the month before? If the answer is no, then learn, right? Learn how to get an income stream. Go to yourinvestingclass.com. Everything there is free. And so everything to gain, nothing to lose. And with that, welcome, a little introduction. Noah Davidson, ladies and gentlemen.
I'm excited to be here. I believe my multivitamin is kicking in right about now, so I'm going to be a little bit wired.
Do they kick in? I didn't know they kicked in.
If you take it on an empty stomach, it does. But
you sure that was a multivitamin?
I've never had an empty stomach in my life, so I don't even know what that's like.
Well, I'm excited to be here. I am not planning on participating in any sort of recession that's coming down the pipeline. I just don't want to play that game.
Okay.
So I will not be participating.
You're going to sit out.
Well, when there's ways to protect your assets.
I like that. I'm not going to participate. That's a nice attitude to have. Cory Halliday, ladies and gentlemen.
Yeah,
in the house.
This is a great topic. I got started about 25 years ago and got licensed, eventually became a Series 4 option principal. And it was really all about protecting your assets. Yeah. And that's what we're going to talk about.
I think you stuttered a little bit when you said that.
Exactly.
You didn't stutter at all.
If you put the right emphasis on the correct syllable.
Yeah. Or you could
One
say
smart
covering.
Feller, he felt smart.
But you could say covering your assets. And the idea is that we're going to utilize options, of course, and covered calls and protective puts and things like that will really generate income or create a positive influence when prices go down that offset some of our risks. And that's stuff I've done for decades and decades.
There's a lot of ways to recession-proof, and it really has to do with cash flow first. There are positions that the issue I have is a lot of people look at particularly in paper assets, they look at it as a net worth issue rather than a cash flow issue.
Yeah.
And that's the first thing to think about is if you're afraid of a recession, you're afraid of net worth being lost. Yeah. That's really the bigger fear. And there's nothing wrong with it. I had a conversation with a smart guy. I had a conversation. He says, I'm going to sell everything and buy gold. And I'm going to sit out and buy gold and sit on my gold. I couldn't do that. Because I would lose my cash flow. There's cash flow positions, and there's bullish positions, and there's bearish positions. And I think the best way to be recession-proof is to have strong, independent cash flow positions that can operate and be maintained, whether the net worth of the equity goes up or down.
Yeah, and the problem with selling everything and going to gold
is
you got to pay taxes on it,
now
but also the
timing.
Also the timing of it. Yeah. How many times have we thought we're moving into a recession? How many times has the market had a false start to the downside? Fake. Yeah, and so the timing, the idea that you're going to be able to predict exactly when to get out and go to gold, and then exactly the time to get back into all your stocks and back. It's just so difficult. Timing.
You can't pick tops and bottoms?
Yeah. That's what you do. That's the problem, right? And so, you can probably figure out certain periods of time that more likely to transpire, but there are a lot of head fakes and a lot of false starts. And so I mean, I just don't think that that's a reasonable outlook. And if you look at the history of gold, it's like gold doesn't have a track record that's super attractive when compared to stocks. Stocks kick the butt of gold long term. Like
equity-wise, but cash flow-wise, it's not even a discussion that stocks win.
That stocks win. And so if you're looking at it from the standpoint of which asset class is better long-term in terms of, I've been alive since the 70s. Well, I would much rather have been in stocks my entire life than gold.
Yeah.
But there are a couple of windows of time where gold goes up and almost everything else is failing.
But you still have it.
And I still have some gold, but I don't go all to gold. I don't think that that's realistic for most people.
I think the reason that is I was doing a podcast for the Rich Dad Stockcast, and I love changing the question because often changing the question gives a better answer. Because if you're asking the wrong question, the question is the steering wheel of the conversation. Mm-hmm. So when I'm a guest instead of a host, often I feel I'm steered the wrong way. Does that make sense?
Yeah.
Yeah.
And so I love being a guest and see where the host steers. But often if I don't like where it's steering, I'll just change the question. And the question was, what do you do? What can people do? What do you do to prepare? And I was like, wrong question. Who do you become to prepare? Who do you become? And the metaphor I gave was, you guys know my brother Spence.
Yeah.
And he's a homicide detective. So he solves murder cases. And he's really good at it, by the way. Of all the murder, I asked him the other night, I go, how many of those do you solve, that you've had? And he goes, well, right now I'm 36 out of 37 on the year. And the 37 I just got on scene last week.
Oh, wow.
So he solves them all.
Yeah.
But anyway, he was a patrol officer driving around on patrol, and he had he would also negotiate. Like, I want to talk to Chris Sabin. What is it, Chris? What's the negotiator?
Chris Angel.
Chris Sabin, the one with Samuel L. Jackson and Kevin Spacey, whatever it is.
Yeah.
Chris Sabin or something like that, or Sabin or something like that. Anyway, he says. He was a negotiator too. Like if there's a hostage situation, he would negotiate. But if you call in the SWAT team, you better be somebody. It's not what you do, it's who you train to be. Yeah. In other words, those guys would work every single week and train constantly, firing rounds, simulating a firefight, simulating a gunfight. So when they're in one, the training is there.
The instincts kick over.
And so I couldn't do that. I couldn't do it if you said, well, Andy, this is what you do. Well, okay, but I haven't trained for that, right? Yeah. It's kind of like coaching a golfer. It's like, Cory, you see how you hit it over there? Just hit it straight.
Yeah.
That's what you do.
Yeah.
How do you golf? Well, hit it straight and hit it far.
Yeah.
That's all you got to do is hit it far and straight. See, that's not the discussion.
Yeah.
How do you golf? Hit it far, hit it straight.
And especially...
as if anyone could just magically pull those skills out of themselves immediately without practice.
And especially when the stress levels are highest, right? So in a gunfight, in a tournament of golf, in a recession, when your portfolio's going down, if it's not who you are, if you haven't trained for that, you're not prepared when those emotions are highest.
Yes.
And if there's one thing we know that's the big connecting force for why people struggle in the paper assets market, it's emotions. Because you get a stock quote, you have an input that gives you feedback of either fear or greed or all these emotions. And now you're not prepared for it because you haven't become that person.
And I admire this friend of mine. He's a new friend. We just met. I really like him. And he said, the reason I'm going to gold is I'm not that guy yet. Isn't that insightful?
Yeah. Yeah.
Kind of know thyself.
Know thyself. He said, I'm not that guy yet. I know what I'm good at and what I'm not. And I'm not going to play that game right now because I'm not that guy. Everybody says, what should I do? What should I do? What should I do? Well, if I'm coaching basketball and I tell you what to do, they're going to come back and say, well, I can't do that.
Yeah.
I'm going to, well, you're right, but you asked me what to do. And so, it's human nature to Google, podcast on, what to do in inflation. Okay, well, go do what we do. But good luck.
Yeah.
Good freaking luck, because the way to deal with a recession is to prepare for it in a couple of ways. So the first thing is, I would say, think about who you want to be in that recession. What's your pay grade? Simple, easy, click the button, macaroni and cheese done in 2 minutes in the microwave. I don't want to eat like that. I want to spend all day slow cooking those ribs, baby, all day. I don't want the drive-through stuff. Because if you really want to live well, you go slow and low. You know, tortoise wins the race. Be smart, be prepared. So anyway, that's my thought. What are you doing? You're sitting it out, huh?
Well, no, I said I'm not participating.
Who have you become?
In the downside.
Who have you become? Now that we know that.
Now that we know that I'm not participating.
Now that we know we have to become.
Well, the reason
now we can talk about what we can do.
The reason I can say that with a degree of confidence is because I've been practicing for
a long
20
time.
some odd years, 20-something years now. And one of the advantages, again, picking tops and picking bottoms is incredibly challenging. But seeing the signs forming and knowing the patterns, how they play out, it's the ability to read the body language of the market. And so that's what technical analysis does for me. It gives me an ounce of timing. And I don't know whether or not this is going to be the time the market breaks and everybody panics and things go way down. But I can see the signs of early warnings. I can see people, behaving more nervous. Like, again, did they buy the dip this time? Well, they started to. Are they going to follow through? If this current rally fails and it breaks that next support level, I have a plan for that. So I don't know what's going to happen, but just like your brother training, doing the drills, you have a reaction time. You develop an intuition, a sense for it. And I don't get it right every time. Sometimes, I throw on a hedge and it becomes an expense. But most of the time when I throw on a hedge, I'm pretty glad I did.
Yeah.
And so, no, I'm not worried about my asset prices going down because I know how to cover my assets.
Yeah. And it's a probability equation of, like, to visualize it, somebody listening to the podcast, there's always this battle between supply and demand, right? Supply is sellers, the people that have supply of stock, they want to sell, they want to get out. And there's demand, people that want to buy and they have money available and they're looking to buy. When you see a big move on a chart, it's not a debate as to who did what. You can see it on the chart. If there's
Chart's
a big
reality.
move, if there's a big move down and a big red candlestick, what happened? There was too much supply, too many sellers for all of the available buyers. So they have to keep marking the price down to find more buyers. There's not enough. Price down, more buyers, still not enough. And they have to mark it down to try and find enough buyers to fill all of these sell orders, all of this available supply. And so charts, they're not foretelling the future, but it's not a debate. Like, I know what happened. I know there were more sellers than buyers. I can see it in the chart. Now, if that happens at critical points, then all of a sudden, to your point, that's a higher probability. Oh, it did that, and it did it at the 50-period moving average. This is probably a trend break. This is probably this or that. And so we do that not because it's a perfect science, but because it will improve our odds of success.
Well, it's like communication among human beings is 80% nonverbal.
Yeah.
And people, when I first started studying technical analysis.
And when they give you the finger, it goes to 100%.
100%.
Yeah.
You're number one, too.
That goes to 100%.
It's up to interpretation.
Yeah.
I don't have to let it ruin my day.
When you get the finger, it goes to 100%.
But body language is an important part of communication. And so when I first started studying technical analysis, 20-something years ago, I thought I was trying to predict the future. I thought that if I see this, I can predict what's coming next. It's that behavioral identification. I'm like, when people do this, sometimes what happens is they get into a buying frenzy. Or sometimes if the price violates that level, it creates inventory because it causes people fear,
more
panic,
sellers.
reactions.
Yep.
Yeah, and so it's a if-then type scenario. It's like, okay, I can see the market losing momentum. I can see, the supply starting to trickle in and holding prices down. You can anticipate it.
Yep.
Because it's a visual behavioral pattern of market participants. It's not a predict the future type scenario. Every once in a while I see the pattern forming and I'm like, oh, okay, that tends to break out and I can profit from it, but not always. Obviously there's risk involved. And so you can take that calculated risk. Well, the same is true for the downside. If I think that the market's going to all of a sudden see an influx of inventory because people get nervous or scared, then that's something that you can protect against.
Yeah.
When we come back from the break, I'm going to do a couple of, I'm going to talk about real estate. I'm not a real estate expert, but I have some. So if I have it, I should at least be able to talk about what I've done.
Yeah.
And then I'm going to talk about some stock positions that I really like. And when we come back, I'll get more detailed on what I think a good recession-proof position means, what it looks like, and we've got a lot power-packed in the second. We're going to talk about what you can do if you're not prepared, how to start. What do you do is there deathbed repentance here for us? Stuff like that, and we'll do that when we come back.
So far, it's been great. I needed a source where I could really enrich my education through stocks. I didn't really have an avenue for it, and it's helped me a lot. The simplicity has really gotten me on the track to where I enjoy the learning as well as it's really solidifying in my mind. And they're not just trying to sell you something, they really care about the people that are in the course, and they really do care about you and your personal goals, and what you want to do is to help you and your family and whatever your goals are in life through that. So it's really been great.
Welcome back to the Cashflow Academy podcast. I'm your host, Andy Tanner. This is where we make investing a lot of fun, simple, always keeping it real. I'm joined here today by Noah Davidson, Cory, Halliday, two great friends, and they're part of the faculty here at the Cashflow Academy. We're speaking about recession-proofing, and there's a saying, let's talk about several elements. There's a saying Warren Buffett says, he says, when the tide goes out, you're going to see you swimming naked. A couple of things on that. Number one, if you need money, things go from bad to worse. Needy people that get put in when there's a forced sale. So there's a couple different ways people will sell. Number one, well, let's talk about three ways to sell. Number one, you have to.
Yeah.
You have some type of margin call, or you have a capital call in real estate or whatever. Things are so bad that you have no choice but to sell. It's the only way to eat. Your 3 boxes of where you can draw expense from. The income box isn't making it happen. You don't have enough old money. You're borrowing money, robbing Peter to pay Paul. That's Ponzi scheme when you're meeting a current obligation by entering to a future obligation. Guys are in a mess. They got to liquidate. And that's where it's so glorious, because the guys who are not in that situation pounce. I mean, Buffett's got $300 billion on the side right now. Isn't that the number? It's up to 300 now?
Over $300 billion.
He's got $300 billion on the side, and he's just sitting there waiting until the sale is. And he's waiting for the tide to go out. He's going to be selling underwear to people, and they're going to be buying it. So it's a big deal there. The second way that I see people sell is they panic. Is they don't have to, but they're afraid of the future, so they panic. That's a lot of selling. And the first causes the second. The people that have to, they're in their margin call, they're over levered. So running it too hot will force you to sell at a discount. We'll talk about running it too hot means. We'll talk about it. What does it mean to run it too hot?
Yeah, if you have margin, you're borrowing someone else's money to utilize to buy more stock. That's fantastic. Leverage cuts both ways. In an up market, it's great, but in a down market, it's horrible, because for simplistic purposes, if I have $1 million and I borrow another $1 million from the broker, I have $2 million that I have in buying power to buy stock, but only half of that is mine. And the broker's $1 million is not at risk. They're not going to take a loss on that. How do they ensure that they don't take a loss? If the values start coming down, they contact you and they say, you either have to add more money or we will liquidate positions so that we're comfortable with our money never, ever taking a loss. So yes, you're able to use their money, but their money's not at risk. And that's important to understand. And so when we look at it from the standpoint of running it too hot. You're putting yourself in a situation where somebody else has control and can make decisions and
Risk
can
is
force
about
liquidate.
control.
Yeah, it is. And so how do you avoid that? Well,
Don't run it so hot.
you could either A, not use margin at all, or B, use a very small amount, right? You don't have to use all of the available buying power. It could be a smaller amount. I mean, I don't use any margin. I don't borrow
neither.
money
Me neither.
from other people, even
buy
though
stocks.
historically maybe I would have done a little bit better. I'm like, why pay them, X percent and borrow that money and put myself in any sort of risk? So I don't borrow money for stock purchases.
I
borrow
don't have any
money.
margin exposure.
I borrow money for real estate.
I'll tell you where I do use margin is so I don't have to use my money. I don't ever exceed my balance, so I'm not really tapping in and paying the broker call rate on the the interest they charge on the margin.
Yeah.
But I can use the leverage so I can keep more of my money on the sideline. And
That's true.
Yeah, so that's kind of where I use it.
Yeah.
But it's knowing how much you can use safely. Leverage, like you say, is a double-edged sword, but it is also
But I'm not.
a
I'm not gonna
tremendous. Well, and I create leverage other ways.
Yeah, I mean, you have net liquidation, you have buying power, and I never get close to either, really, to max that out. In real estate, you talk about becoming, I don't style myself as a guy like a Than Merrill or Kenny McElroy, but, I have, in real estate, I look at those loans, and I'm very conservative. It is so tempting to refi out, pull all that money out tax-free, and then go do something with it.
Yeah.
And I probably am too conservative. Why? Well, that's not been I haven't become that guy that can do that yet. But I look at it as a margin of safety where I look at that thing, I say, all right, my cash flow is really big.
Yeah.
And if the rents were to fall, I can still cash flow. And see, the key is not needing all that money to kind of live within a means to where you don't need it. If you can get there, if you really don't need it, you can. It's kind of like Costco. The direction goes the money goes one way at Costco. It might be less going there in a recession, more going in times of growth, but the money always goes one way. It's the neediness of having to sell that hurts you. Whereas if you're cash flowing and everything's getting serviced, you're fine. The other way to sell, which is the way I prefer to sell it strategically, is if I look at the asset and we're not going to make a decision based on a price necessarily as an investor. Traders would. But as an investor, I'm looking at egg production out of the goose. I'm looking at egg production. If the goose is sick or it's kind of out of eggs or it's old, you might say, look, there's just a better goose over here. And that's strategic selling. That's Buffett's way to sell. Okay, let's talk about an asset. I always talk about ExxonMobil a lot just because I love it. And I'll kind of show you a cash flow position of why you can't build this overnight, but why in a recession I don't worry about it too much. So I loaded up on that one. It's not one of these stocks I've held for 1,000 years. Like Apple, I've had a long time, but this one I really loaded up on it in COVID, and I did it when oil was free. Because I'm like, oil ain't gonna be free, dude.
Yeah.
That's like a VIX spike. That ain't lasting.
That's not going to stay.
So I bought a bunch of that. We'll call the cost basis 40. Let's call it that. And so it goes to 80, and then it goes to 120.
And maybe even more importantly, when you first bought it, probably went down a little from where you bought it.
Yeah, it did a little bit. It was got in the high 20s, low 30s.
So you didn't pick the bottom, and that's perfectly fine.
No, I didn't pick the bottom.
Yep.
And but here's the thing. So someone says, all right, it went from 40 to 80, doubled, and then it went from 80 to 100. It's probably like 120 today, 118, somewhere around in there. I don't know where it is, but I don't care that much where it is. But I can't sell that stock. And people are like, well, why wouldn't you just take the profits? And I'm like, because I kill the machine. And here's the deal. The dividend is $1. It's 99 cents. It'll be $1 next year. They've raised that dividend every year for 45 years straight. So I was in junior high school, when they or younger, when they started raising that dividend every year. They don't want to break that streak. Now look at this recession history. Okay, Jimmy Carter had an energy crisis. It's probably as bad as any that you see. You got hostages in Iran. You got all these problems. ExxonMobil raises their dividend. Then you've got .com.
Yeah.
Everything goes down, raises the dividend. subprime meltdown, like the worst global financial meltdown we've had in my lifetime, raises the dividend.
Yep.
You got COVID where oil is freaking free. Do you hear what I'm saying? You're ExxonMobil, and when you pull something out of the ground, you have no profit for it. You got to pay someone to take it off your hands because there's nowhere to put it. Too much supply. They're not, my bathtub's full. My swimming pool's full of oil. I can't. I'll pay you to take this oil off my hands.
Even more than free, it went negative price.
You have it's negative price, and what do? They raise their dividend. So that's a moat in my opinion. If you still have a castle standing after what you sell goes to be free, and you can borrow money and issue bonds to pay the dividend guys, I like that.
Yep.
So it's got $1 dividend. So if my cost basis is 40 and I'm getting $4 a year or $1 a quarter, that's 10% on my money right there.
Yep.
As long as they don't kill that dividend, which I think
would double your money every 7.2 years.
Yeah. So, but here's the other thing. So now it's at 120 or 100 or whatever it is. Writing a 50-cent covered call on that is like
way conservative.
You can do that in an IRA all day long, right? In an IRA. Yeah. And so I'm writing that there, and it's just.
So that's another $6
so that's
a year.
$6 a year. So that's $10 a year on a $40 investment. That's 25% on my at-risk capital.
So you're getting. Of the money you put in, you're getting 25% of it paid back. So now it's paying
for itself every 4 years.
Yeah.
There you go.
Every 4 years. Okay, so I've had this more than that length of time. But so now you look at this asset, it's like, why would I ever freaking sell that? My question is this: are we going to stop using oil in the long term?
No.
And that's why they can raise that dividend all the time. My question isn't, there's a recession. I'm like, okay, let's say there's a war. Let's say there's 9/11. Let's say there's global warming. Let's say, Al Gore came out, whenever he came out and said, here's an inconvenient truth. We're going to blow up in 5 years in the world. And at that time, oil, fossil fuels was 85% of the world's fuel. And now it's all the way down to 84.
Yeah.
Thanks, Al. I mean,
and it will eventually, but these companies are even adjusting for that, getting into nuclear and getting into different alternative. And so they're adjusting with the times. But the point is that you're getting 25%. It's sort of like Buffett, I think, in his Coca-Cola.
$3.25.
He originally,
$1.60 dividend.
I want to say his investment was originally $1 billion, and he collects about $1 billion in dividends every year from Coca-Cola. So, you're not there yet where you're getting your money you invested paid back every year.
I don't get $1 billion.
But to have 25% of it.
I've only had the stock 4 or 5 years, something like that. So if you're making 25% cash on cash, what the hell do I care if that goes to 50 again? Or 20.
Yep.
And I hope it does. Why?
Buy more.
Please.
Yeah. It's one of the reasons I love hanging out with you guys. You teach them to buy things.
No, but I'm telling you. And so to me, that's a good example of not worrying. I just, if it goes down, I'm just excited to buy more and more and more. Because my question isn't, are we going to have a recession? My question is, are we going to use oil long term? And the answer to that is yes, we are. And they're a big company that knows how to pump it. Why would I pay a capital gain? No way. I'm keeping that thing. Yeah. So that's a good. That's an example. Real estate to me is the same. You look at a little single family house. I prefer not to sell those. Yeah. It's when you're forced to sell them that it really sucks, because then you got to take whatever the market will give you, and then you got Warren Buffett staring at you saying, it looks like you need to sell your Exxon, Andy. Yeah. Looks like you need to sell it.
He'll take it out of your hands.
You know what? I'll buy it for $35. You're only losing $5.
Basically, he's buying it at a discount, right? Getting $1 of value for 50 cents.
The option market's not going away in a recession.
Yep.
All it is going to have a higher VIX that pays more premiums. True?
You know how I can prove that I'm not in the Illuminati?
And you can't.
At the same time,
no,
I can prove it. I can prove it.
I'm proving he's in. Every Illuminati member denies they're in the Illuminati.
Here's how I can prove
That's
it.
evidence.
In COVID, Andy bought Exxon and I bought Chevron, and Exxon's done better than Chevron. So that proves if I was in the Illuminati, I would have known.
If I was in the
Now,
Illuminati,
Chevron
I
has
would
done-
have. Hey, what does Cory Halliday and Nancy Pelosi have in common? They both got in on the IPO of a freaking Visa. Okay, that's Illuminati.
Yeah.
If I was, he buys Chevron so he can tell this story
Yeah.
that he's not the. He's like, if I buy Exxon,
No.
now they know
It would
I'm
be-
in there
it would
because I
be
have
too
Visa
good.
and Exxon. I'll buy Chevron. I still make some money.
See, my Chevron's only
protect
gone
my
from
Illuminati status.
my Chevron's only gone from 70, and I think it's like 160. So I've more than doubled, but I haven't tripled. So
Oh,
you
Jiminy
outdid me
Christmas.
on that one. I should have bought Exxon.
But it's not the triple. You're not selling yours.
No,
You're not selling
oh, no.
mine, so it's
I-
irrelevant. It's writing options.
yeah.
And dividend, and
Yeah,
you
I
can
think
learn
Chevron's-
that in 20 hours of training at the Cashflow Academy. You can learn
Yeah,
it.
Chevron's dividend, phenomenal. I can still cash flow with covered calls
Okay.
and do all the same stuff.
Last thing we're going to talk about here, because then we're going to have to finish this up. Okay, so let's say someone didn't do all this and they're not prepared, and I'm going to put on my salesman hat here and tell people to buy a class from us. So July, we're sitting out on the back of my deck, going to eat something. I can't remember if we were having honey baked ham or we were having something
Good.
I remember that. And we were sitting out the back of my deck and we were talking about recession and problems and everything bubbles. And Cory, it's his fault because Cory sent out a text that he was kind of saying, And when Cory, Mr. Bullish forever, never met his stock, he didn't want to buy Monopoly, land on it, buy it, Cory, says, ooh. Then I say, ha! I freak. He raises his eyebrows and I'll go into a panic. So we all three of us started talking about, what are you doing, Noah? What are you doing, Cory? What am I doing, if we have an everything bubble bust or even a recession? And it was such a great discussion that we got on our notepads and wrote the stuff down. And it really started off just us three brainstorming what three of us would do.
Yeah.
And I thought, man, the students would just love to be in on this conversation and have honey baked ham with us. And so we decided to do an event called ARMOR, Advanced Risk Management, more important, Opportunity Readiness, ARMOR. And so we did it for 4 days. We had a 4-day event that we recorded. And most people have not become the investor they need to become to do what they want to do. So if they come to me and say, what are you going to do? I'll say, here's ARMOR, this is what I'm going to do. And they're going to say, well, I can't do that. Well, why not? Well, I'm not a golfer. I'm not a football player. I'm not an investor yet. I'm not a trader yet. I'm not a technical analyst. I'm not a risk manager. I'm not a Series 4 option principal. You're on this show because of who you are. Series 4 option principal knows how to manage risk better than anyone, that I know. You're on this because you are a trade adjuster. You adjust trades, better than anyone I know. And so it's who you become. So the ARMOR class would be cool, though. I'd still take people to take it because that's how you start to become that. You look at that and say, okay, that's what I'm supposed to do.
Yep.
Now I'm going to go into train and do it. Now here's why the ARMOR class is we keep track of who enrolls in what at the Cashflow Academy. And it's so funny because you can tell who the smart students are. Bam, front row. They're there the first time. We announced that done. I said, I haven't told you how much it costs yet. Doesn't matter. I'm in. And what happened was that's really interesting is they understood the SWAT team aspect of that is these are events that are not run of the mill. Like you train for the firefight because 9/11 only happens once in a long time. And that training for first response needs to be tight all the time because you don't know what's coming. That's why people get their face kicked in because, I'm not wrecking today, so I'm not going to worry about fixing my seatbelt just yet. Look, you can't come to me in your 1971, Dodge truck and say, hey, when I'm in a wreck, how do I get an airbag installed really fast when I'm in that spin and I've lost control of the car in the snowstorm and there's a semi here? Could you tell me how to install that airbag? It's built that way.
Yeah.
Your portfolio's built with an airbag in it. And then you also have first aid and repair. So final thoughts on recession proofing. Skills, becoming, big picture stuff, whatever.
You know, it's I've been a bit of a perma bear, not really in like my positions. Like I'm still
You've had a positive delta, but a
but I've
negative
been
mind.
watching that snowball just get rolled uphill.
Yeah.
And rolled uphill and rolled uphill. And I think we're sitting at this point where
It's going to be awesome.
For the first time in a long time, I'm actually concerned about the downside, and that could materialize quickly.
Could be so good.
Which kind of, again, it gets me excited, but also I feel the only anxiety I feel is for people who aren't prepared. And they should be feeling that anxiety. They really should, because there's something they can do about it now that could protect them, that could benefit them, could get them ready for the opportunities that present themselves. Because what you're going to see is a transfer of wealth.
You have the word of God and the hand of God. Now that's profound. I should just leave it right there. Yeah. The word of God said we're in a geocentric view, right? Sun comes up, goes down. Galileo looks in the stars and sees planets around Jupiter, or moons around Jupiter. He's looking at the hand of God. So you got the word of God and the hand of God. Now what does that mean? Well, there's what he says and then what he actually does, right?
Yeah.
Sometimes two different things. So now you look at the word of Warren Buffett and the hand of Warren Buffett.
Yeah.
And when I look in my telescope at Warren Buffett, I see $300 billion sitting there that is getting killed by inflation, that's losing buying power.
Yeah.
But he hates cash. He hates cash, and yet he has $300 billion.
More cash
You
than
don't
ever
think
before.
that dude, you don't think that dude's sitting there just can't wait?
Oh, yeah.
He's like, I've got to stay alive 5 more years to see this come. That's why he's making it so long. He's not going to miss this.
Yeah.
He's living with a purpose.
Dude, there's no
to
way.
buy the
He's
dip,
got a
the mother
huge-
of all dips.
He's not going to miss out on the biggest one of his life because you got $300 billion sitting on the side.
Yeah.
Come on. That's the hand, not the word. I don't care what anyone says. You got $300 billion there? Come on.
Yeah.
I don't know. Am I off?
No,
Am I reading tea leaves into stuff?
I mean, it's
Come
to
on.
your point. It matters more what you're doing than how you feel, right? And that's your positioning determines your gains and losses. And he always is a cheerleader for stocks, and we are too. Look, we've made tons of money in our lives on stocks. It's what we do, it's what we love, and it's made a difference in our lives. So I'll always cheerlead for stocks. But I also need to be realistic. And I need to say, okay, well, what am I doing? And I have sold some stocks, which, for years and years, I used to tell people the biggest bubble I see is in those predicting a bubble. I wanted to emphasize to them that the bubble is in the fear. It's in everybody predicting a bubble and thinking a collapse. Yeah. And I said that for years and years, and now I don't say it anymore because as of recently, I feel like, okay,
summer.
now a true bubble can happen. It doesn't happen when everyone's fearful. It happens when people are just throwing caution to the wind, and capital has been too readily available.
They get running hot. They get running hot.
Way too hot. Too much leverage in the system. When you see all these meme coins and all this stuff that people are just throwing millions of dollars into, it just speaks to, okay, those are the signs that you see. It's not when there's a ton of fear, right? You don't get hit by the semi that you see. You get hit by the one that you didn't know was there, right? And so that's the point, is just the sentiment in the market has completely shifted, and the amount of greed in the markets is palpable. It's something you can feel, and it's just something that, okay, now we're in a different environment. And Warren Buffett, when he raises more cash than he's ever had in history, he speaks to the fact that, I love stocks and I want to buy more of them.
But he's not. But he's got cash.
He's not right
well,
now.
and there's an urgency there because the market hasn't rolled over yet.
Yeah.
The real estate market hasn't rolled over yet, but that potential is probably, there's some urgency there. There's some urgency.
You look at that Schiller PE and what we're paying for earnings, and it's just glorious.
And if you
I'm getting all excited.
Well, yeah, but if you think you're the person, that can just, to your point, just, oh, well, once it starts to happen,
learn
then
it
I'll
real
go
fast.
learn to be the
I'll
person.
go to SWAT training.
Yeah,
train when
I'll
they're
go
shooting at me.
immediately.
Can you imagine training
train.
in SWAT while they're shooting at you? That's the training, I guess.
I mean, if you think you
You're
can
gonna
pull
get
it off
shot.
in that way, it's not going to work for you.
You're gonna
This
get
is
shot.
something where you have to put in, you have to dedicate yourself that, hey, I'm going to be the person that's ready to take advantage of that when it happens. You can't decide to be that person in that
But
moment.
we just finished our annual event, the labs. We just finished those. It's a month-long event for elite students only. And it's interesting, the VIX trade that we talk about the leverage of the VIX relative to the S&P, where a 5% move in S&P can be 100 or more, in the VIX. So you have leverage built in there, and then you have your options on that. You buy a call spread on the VIX. Okay, I know what the VIX is, Andy. I know what a call spread is. Okay, you know what it is. You're on awareness on the education continuum. You're on awareness. Okay, you're now at competency. You can get down the test. Can you do it? Can you get to proficiency? Can you do it?
Yeah.
Hit the ball straight. I know how to golf. I do. I know how to golf. Hit the ball straight.
Yeah.
Well, we have the blue screen there asking if we're still here. So with that, we'll close up the show. But I think, Noah, Cory, get yourself ready. It's not what you're going to do in this recession. It's who you're going to become before it hits. So hit the weights, get going, do the things you're going to do. Learn about some of this stuff. You've been listening to Cashflow Academy podcast. Like, subscribe, notification bell. Go to yourinvestingclass.com right now. Get those free resources and learn about the first steps to becoming who you want to become, instead of asking advice all the time, like, what should I do? Become that person. And it's a great feeling to become a good golfer. I wouldn't know that. I just hear that from Cory that it is.
He tells me it's awesome.
Great feeling to become a technical analyst. Noah tells me it's great. So there you go. Thanks for watching, and we'll see you next time.